The value of your money today actually might be worth a lot more than you think it is. We're going to be discussing that on today's episode. It's coming up next. Here's the thing. One of the things people love about our channel is that we're not here to cut back on ideal lifestyle spending. So this isn't about ratcheting back and making a lot of sacrifices to your spending plan, and yet people still do it naturally when they become involved with our coaching. So why might that be? Well, you may have heard of a concept that money available right now is actually more valuable than the same amount of money in the future due to its potential earning capacity. And this concept is actually known as the time value of money, TVM. And this principle holds that provided money can earn interest, any amount of money is actually going to be worth more the sooner that it's received. TVM has also been referred to as present discounted value. So how did this concept actually come to be? Well, the time value of money comes from the idea that good, rational investors prefer to receive money today rather than the same amount of money in the future because of that money's future potential value, the ability for it to grow over time. For example, money that's deposited into a savings account earns a certain amount of interest rate, and these days, obviously, that interest is quite small, but it's still compounding in value. And this concept can be applied in many different ways, not just in terms of dropping your cash into a savings account, which is something we wouldn't recommend you do because there are much better ways of building wealth, of course. But let's assume that you have the option to choose between receiving, say, $25,000 now versus $25,000 in 2 years. Obviously, most people are going to choose the first option. And the reason is going to be different from one person to the next. Some may want the cash now to make purchases that they otherwise wouldn't have made. Some to grow their cash flow position by buying new assets, and others to grow their cash flow position by paying off debts faster. But deep within ourselves, we tend to weigh our current problems as bigger than our potential problems in the future, which for some reason we never think we're going to have anyway. We're very now oriented, very instant gratification oriented as a culture. So most people are going to prefer to have that $25,000 now. That's a no-brainer, in my opinion. Now, it becomes even more important when we take a look at why you would want the $25,000 now rather than in 2 years. Using that cash to purchase goods that, say, depreciate, that's not going to leave you better off down the road. So that's one area that we need to be very careful of when we get windfalls of capital, because it's said that almost 8 out of 10 Americans live paycheck to paycheck. That's absurd. That's insane. We have to break that cycle. So we have to know how to treat money once we have it. And we have this tendency to spend what we have when we have it. This has also been referred to as Parkinson's law, which is that expenses will increase to meet income. Part of this is the value that we place on the now and the lack of value that we place on the future. If you begin looking at money through the lens of this concept of the time value of money, then you're gonna begin to see that you can still very much live in the present with your money, but you can do so in a way that produces massive benefit for you down the road. When you start seeing $25,000 today as potentially $50,000 in 2 years due to the investing power that $25,000 gives you, you start to handle your money completely differently. This happens to me all the time. One of my creature comforts is Red Bull. I don't know why I like it. I've liked it for almost 20 years now, which is insane. Frankly, I can't believe I still drink it, and I only drink probably 2 or 3 of them a week. But when I'm down considering purchasing, that number is way down from what it used to be, because every time I buy a Red Bull, I recognize that the $2.50 that I'm going to be spending on the Red Bull is actually worth 3 to 5 times its face value. It's really worth closer to $6 or even as much as $15 if I'm spending $3 on a can. So recognizing that I could be spending as much as $15 of future value makes it very easy for me to choose not to spend the money. Now, it's the same thing in this case. If that $25,000 car appears as a $50,000 car due to the opportunity costs that you're losing, the cost of the choice, your choice actually has a built-in expense to it. And the sooner you realize that, and then you apply it to how you're handling your money inside our plan, the sooner that you can make massive strides financially. So what does this all mean to you? Well, the way we like to put this into practice is by allowing the concept to change your mindset about money, like it did for me. raising your perceived value of the money that you have so that it affects your decisions in a positive way. And if you're putting this additional value onto your cash at the level of your mindset, you can start to change the way that you actually distribute your income. You cut expenses way down and you drive more of your dollars into things that are actually working for you. And this is something that we teach extensively here on this channel. So for those of you that have watched a lot of our videos here, this is probably not a completely new concept, and you might already be implementing some of it. But please share a comment below with your experiences if you are. How has this kind of a concept of future value of money, time value of money, changed the way that you handle your money? Make sure you leave a comment. Also, drop a like if you like the videos like this that help conceptualize how we should be treating our money. And make sure that if you're not already, consider becoming a subscriber to the channel. It's one certain way to remain eligible for the ongoing contest for a weekly $25 gift card. Make sure you check the description below for contest details. And also look at all the videos here on this channel. Deep dive, figure it out. This is truly a better way of managing your money and dealing with the banks than we were ever taught by our parents or in the school systems. We look forward to seeing you on the next video or during your complimentary phone coaching session, which you can also schedule using the link below. Until then, make it a great day today and take care. All right, guys, welcome back to my favorite time of our videos, which is the weekly giveaway $25 Amazon gift card. Make sure you check the contest rules in the description below to be an active participant. This week's winner is going to Deborah McLean. Congratulations, Deborah. Deborah says, I'm also digging in and using these techniques. She's already improved her cash flow situation. She wants to learn all she can, and she's looking forward to her phone conversation with us in October. Congratulations, Deborah. This is going to get you off to a great start. Bumping that cash flow position. At least you got $25 to go spend on something really nice for yourself. And we're going to get you a lot more money come October so you can go out there and shop for things anytime you want to. So we'll look forward to seeing you on that conversation. Thank you again, Deborah. And we hope that the next week winner is going to you.